Okay, let's hash this down real quick. So Schwab Asset Management announced forward share splits on 20 of their ETFs, including SCHD, which will be undergoing a 3-to-1 stock split that'll take place end of day October 9th and reflect the changes on the 11th. That basically means if you have one share of SCHD by the end of trading day on October 9th, then by October 11th, that one share will turn into 3. But when that split happens, your market value will not change. So let's say the share price of a company is $30 per share and it undergoes the same type of split. So instead of having one share that's worth $30, you will have 3 shares that are worth $10 each. You have the same market value. So that part is pretty simple. But the first question that I had on my mind, and that a lot of people that invest into this ETF also had on their mind, is why is this happening? Let's actually break down the reasons why forward stock splits actually happen. I can break it down into 2 categories. The first one's financial. They could be expecting a lot of growth, or the company or whatever it is having a lot of growth. It's currently undergoing it, and growth within a stock or a company can result in the share price going up. So ultimately, when the share price is going up to a point where it seems pretty high, then they will undergo a stock split. Some may even say too high, and being too high is subjective, but that goes into the second reason, which I believe is mental. A smaller stock makes it more appealing for retail investors to actually invest into it, especially if you're somebody like me that doesn't invest a lot. I only invest $30 a week. So a company that I know is going to give me some really positive benefits in the long run, and it's less than $30 a share, it's going to make me want to invest into it more simply for that reason. Owning whole shares just feels good. And it may sound pretty stupid, but there's actually some analytics behind it. So according to the Bank of America Research Investment Committee, companies that undergo stock splits typically increase their share price by an average of 25%, a comparison to companies that don't within S&P 500 by right under 12%. Now, of course, this is an ETF we're dealing with and not a regular company stock, but again, the feeling of investing into a company that is in your price range, despite the fact that fractional shares exist, feels a lot better. So with the financial and the mental reasons in mind of a share split, what does this actually mean for investors? Now, based on that one piece of analytics alone, it's very possible that SCHD may go through a slight boost in its share price within the next 12 months. However, SCHD already has a pretty nice history in itself, with the past year of it increasing by almost 17%, past 5 years over 50%, about 10% average per year, and the past 10 years over 121%, about 12% per year. That consistent increase does make sense with an ETF whose primary purpose is to track stocks that have consistently paid a dividend to its shareholder within the past 10 to 20 years, I believe. And you would imagine that in order for a company to be able to pay a dividend consistently, let alone increase it, it would have to be bringing in revenue, therefore a consistent increase in their share price. And side note, that makes sense for SCHD's dividend payout history, because they've been able to consistently pay and increase a dividend to their shareholders for the past 12 years while maintaining a 5-year dividend CAGR of almost 13%. That 5-year dividend CAGR just basically means if you invested in the SCHD 5 years ago from this point right now, then your dividend yield would have to have increased by roughly 13% every year to get to where it is right now. And speaking of the dividend, they recently also announced that they will be paying out a dividend of almost 75 cents per share, which is a decent amount. But what I found interesting and pretty cool is that in comparison to Q3 of last year, it's about 15% more. So when I think of an increase in dividend payouts and year over year, I'm thinking maybe potentially more money coming in somehow, which could be based on the reason why they did the share split. But that could be a possible option. That's definitely best case scenario. Worst case scenario, this is still a very healthy long-term ETF, and long-term dividend investors like you and myself will just continue to invest into it and watch the share price grow and watch the dividends come in and increase year over year. And it'd be a lot cooler to see almost 5 shares turn into almost 15, at least in my case. But let me know in the comments below, what do you guys think about this random news? I know for a lot of you guys, it may not make sense, especially with the share price being so low. I'm definitely one of you guys, but let me know how you feel in the comments below. And I appreciate you guys watching this video as always. And until next time, take care.